So every section have its own rules and regulations in order to claim the deduction under that particular section. So if you are investing in public provident fund, then you are going to get deduction under section 80C. And in the case of insurance premium for parents, you can claim an additional deduction of 25,000. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Dear students, welcome to this new session on unit number 5, session 1, that is on the topic Deductions under chapter 6A, which comes under Income Tax Act of 1961. So this particular chapter deals with what and all the deductions we have under chapter 6A with respect to section 80C to 80U and in particular to individual person. So as a person, we will be paying taxes and we will not be knowing what and all the deductions available to reduce the tax burden. So here this particular chapter, it's going to educate you, it's going to knowledge you about what and all the deductions we have under chapter 6A with respect to individual person. So what is chapter 6A of Income Tax Act? Yes, first we have to understand what is the meaning of chapter 6A. So what and all comes under that particular topic or particular concept. So as per chapter 6A of the Income Tax Act, a taxpayer can claim deductions from income on the basis of various tax savings investments, permitted expenditures, donations, etc. The deductions under chapter 6A are designed to benefit the taxpayer so that the tax burden is reduced. So here under chapter 6A, an individual person is going to get the deductions and permitted expenditures or exemptions and also the exemptions which are available under chapter 6A for an individual person to reduce the tax burden and to increase the savings. So under chapter 6A, it is mainly for to claim the exemptions and permitted expenditures and any donations made by individual persons so that they can reduce the tax burden. So by investing through these deductions or by taking the exemptions, they can reduce the tax burden. That is the beauty of chapter 6A of Income Tax Act 1961. For instance, deductions can be claimed under section 80C, 80CC, 80CCD, 80CCE, 80D, 80U of the Income Tax Act. Yes, so in deductions, we have different deductions. 80C, 80CC, 80CCD, 80E, 80D, 80G, 80U. We have different deductions and every deduction, every section, for example 80C. So every section have its own rules and regulations in order to claim that deduction under that particular section. So now we will study one by one about each section, about what and all the benefits we are going to get in that particular section. So section 80C. So section 80C, it provides tax deductions of up to rupees 1,50,000 through tax saving investments. Yes. So section 80C is going to provide us up to rupees 1,50,000 of deduction and only individual and HUF can claim deductions under section 80C. Yes, here only the individuals and HUF can claim the deduction under section 80C. So in 80C, the maximum deduction available is rupees 1,50,000 and who can claim this? Only the individuals and HUF can claim the deduction under section 80C. The following are some of the investments and expenses. Yes, so in what and all you can invest under section 80C? In what if you invest, you will get deduction under section 80C. So the first thing is PPF, Public Provident Fund. So if you are investing in Public Provident Fund, then you are going to get deduction under section 80C. If you are investing in Public Provident Fund, you can claim the deduction under section 80C. You're going to calculate the total income. Your total income is like 5 lakh. So you're going to take the deduction under section 80C where you invested under Public Provident Fund scheme. And next, ELSS, that means equity linked savings scheme. So if you are investing in ELSS, yes, again you can claim that ELSS under 80C where you will get the exemption. Next, NSC, that is National Savings Certificate. If you are investing through National Savings Certificate, again you will have the option to take the deduction under section 80C. And ULIP, that is Unit Linked Investment Plan. Unit Linked Investment Plan. If you are investing in ULIP, again you can claim under section 80C. Next, SCSS, that is Senior Citizen Savings Scheme. So in SCSS, that is Seniors Citizen Savings Scheme, if you are investing in that particular investment, you can get the deduction under section 80C. Next, payment towards life insurance policies. If you are making any life insurance policies, if you are making any, paying any premiums towards LIC, then you can claim the deduction under section 80C. Next, payment towards life insurance premiums and tuition fees paid for up to 2 children. Yes, if you are paying any school tuition fees up to 2 children, whatever the tuition fees paid by the parents, that is deductible. So it is an expenditure for you. So you can claim it as a deduction under section 80C only up to 2 children. If you are paying tuition fees for more than 2 children, then it is exempt up to 2 children only. The remaining will be taxable and you can't claim that remaining one. Tax savings fixed deposits. Yes, if you are investing in any tax saving fixed deposit scheme, again you can claim it under section 80C. So that is the beauty of 80C. In section 80C, the maximum exemption limit is rupees, or deduction limit is 1,50,000. The maximum deduction limit is 1,50,000, and so only the individuals and HUF can claim the deduction under section 80C. And these are all the available expenditure where you can claim these many expenditures are investments as the deductions under section 80C. Moving further, 80D, section 80D. So section 80D, this subsection under section 80 of the income tax allows individuals to claim deductions on premiums paid for health insurance policies. You can claim maximum deduction of rupees 25,000 premium paid for self and family members. Yes. So section 80D deals about if you are paying any health insurance premium. If you are paying any health insurance premium, you can claim that deduction under section 80D. So where you are going to claim the health insurance premium, and the maximum deduction or the maximum amount what you can claim is rupees 25,000. So section 80D deals with any health insurance premium paid by a assessee for his life and for his family members, that is for spouse and children, and the maximum deduction available is 25,000. And in the case of insurance premium for parents, you can claim an additional deduction of 25,000. So for your family, like for the assessee family, like for assessee, spouse and for children, you can claim 25,000. If you have the health insurance for his parents also, again you can claim additional 25,000 rupees. So total now 25 plus 25, 50,000. If your parents are senior citizens, that is more than 60 years or more than that, you can claim a tax deduction of rupees 50,000 for their health insurance premium. Yes, if the parents are up to 60 years of age, you can claim your 25,000 plus parents 25,000. If their age is more than 60 years, then you can claim yours 25,000, your family 25,000, and parents health insurance rupees 50,000. So if you have parents health insurance, you can claim up to 50,000 of that particular parent's health insurance premium in case if their age is more than 60 years and yours 25,000. You can get an additional deduction of 25,000 if you are also a senior citizen. Yes, if you are also a senior citizen and your parents also a senior citizen, again you are going to get the additional deduction of rupees 25,000 under section 80D. Thus, you can claim a maximum deduction of rupees 1 lakh under section 80D. So, if you have a family, you can claim 25,000 rupees of deduction as health insurance policies. And if you have parents on their life, you can take the deduction of 25,000. So 25 plus 25, 50. If your parents are aged, they are senior citizens, you can claim 50,000. So 25 plus 50, 75. You're also a senior citizen, so 50 plus 50, 1 lakh. So maximum up to you can 1 lakh. Up to 1 lakh rupees you can take the deduction under section 80C with respect to health insurance premium. So the next deduction is section 80E. So you can claim tax deductions on interest paid towards your education loan under this subsection of section 80 of the Income Tax Act. So there is no maximum limit for claiming deductions, but you can claim it for up to 8 years from the beginning of interest repayment or till full repayment of interest, whichever is first. So here section 80E is all about deduction on interest paid towards your education loan. Yes, if you have taken any education loan and if you are paying any interest on that education loan, you can claim the interest paid, whatever the amount you are paying, the interest amount, you can claim that as a deduction under section 80E. So up to how many years? Up to 8 years you can claim, or till repayment of the interest or the repayment of the loan to the bank, which comes first, that is whichever is first. This education loan can be taken for self, spouse, children, or if you are someone's legal guardian. Yes, if the education loan is taken for the purpose of your personal education or spouse personal education or children education, so for anyone, if they are depending on you, if you have taken the loan, education loan for those people, then you can claim the interest paid on that loan in section 80E. So section 80E deals with interest paid on the loan taken for educational purpose. Next, section 80G. So donation to various charitable funds and institutions are eligible for deduction under this section of section 80 of the Income Tax Act. So depending on the institutions, you can get up to 50% or 100% of the amount donated deducted from the gross total income. So section 80G deals with the deductions available towards the donation made by a particular individual person, by a particular assessee. So if you are donating amount to any schools or any charitable trust or for any associations or for any NGOs, you'll get the deduction under section 80G. So based upon the kind of donation you are giving and for whom you are giving, it will be decided whether it is 50% exempted or 100% deductible, whether it's 50% deductible or 100% deductible. So while you are giving the donation, just you have to keep in mind that you are going to get the deduction under section 80G. From 2018, donations eligible for deduction under section 80G have a limit of 2,000 for cash transaction. When claiming this deduction, you should also provide the details of any institution to which you donated. Yes, if you are giving through check or if you are transferring through bank, so you can give any percentage of amount, like any kind of amount, like 40,000 or 40. So if you are transferring through bank or if you are giving through check, so there is no limit. You can give 10,000, 20,000, 30,000, 40,000, 1 lakh. But if you are giving the donation in cash, the maximum donation you can give in cash is rupees 2,000 rupees. So if you are giving cash or if you are donating cash, it is exempted up to, it is deductible up to rupees 2,000. That you should have to provide the details for whom you are donated rupees 2,000 rupees. Okay, for whom you are donated 2,000 rupees. So if you are giving donations to anybody through cash, the maximum you can give is 2,000 rupees, and you also give the information that for whom you are given the donation. If you are giving through check or transferring through bank, you can give how much ever you want, like 10,000, 20,000, 1 lakh, how much ever you want. So section 80G deals with donation given by the individual person or by a HUF to a particular organization. Next one, section 80IA. So section 80IA of the Income Tax Act provides instructions regarding tax benefits available for certain enterprises. Such organizations engage in the development, maintenance of industrial parks and infrastructure facilities. Furthermore, they are involved in the telecommunication services and distribution of natural gas. So section 80IA, it gives the information about the deductions available for the enterprises, for the business entities who are maintaining the public parks and the infrastructure facilities. So if any business entity is maintaining the public park and public infrastructure facility, they are going to get the deductions under section 80IA. So 80IA will be providing the information regarding to that. Next, section 80U. So section 80U, it deals with this subsection under section 80 of the Income Tax Act, allows resident taxpayers with disabilities to claim tax deductions. To claim this, such individual need a person with disability certification from relevant medical authorities. Some of the conditions that qualifies under section 80U are autism and cerebral palsy. Persons with normal disability can claim a maximum reduction of rupees 75,000, while those with severe disabilities can claim the deduction up to rupees 1,25,000. Yes, section 80U, it deals with, or it gives the deduction for the people who are with disabilities. If the people are suffering from any disabilities, they can claim the deduction of rupees 75,000. For severe disabilities, they can claim the maximum deduction of rupees 1,25,000. Next, moving further, tax deductions maximum allowed limit under section 80. So far we got to know what is the deductions available under each sections. So here you are going to get to know what is the maximum deduction they can claim under a particular section. So first one, section 80C. In section 80C, it can claim against expenses like tuition fees, children's, repayment of home loan principals, etc. and investments like ELSS, PPF and NSE, etc. What is the maximum deduction they can claim? They can claim up to rupees 1,50,000, not more than that, under section 80C. Next, section 80CCC. In this, for payment made towards annuity pension plan, any payment made towards annuity pension plan that comes under section 80CCC, you can claim up to rupees 1 lakh. Next, 80CCD. Against any amount paid towards pension scheme under central government. So, against any payment paid towards a pension scheme under central government, and the maximum amount you can deduct or you can claim is 1,50,000. Next, section 80CCF. So, for investment in infrastructure bonds, section 80CCF, the maximum deduction is rupees 20,000. Next, section 80D, it deals with premium paid on health insurance policies. So, the maximum amount is 1 lakh rupees. Next, 80DD, against expenses incurred for taking care of disabled dependent relative. Maximum 1,25,000 you can claim as deduction. 80DDB, it deals with on expenses made for specific disease. So, maximum of 1 lakh. Next, section 80E, for repayment towards education loan. That is, there is no limit, 8 years or up to the repayment date, whichever is first. So, that is the criteria. Next, 80EE, against interest payments of home loan. Maximum you can claim rupees 50,000. 80EEA, home loan taken between April 1st, 2019 and March 2020, up to you can claim rupees 50,000. Next, 80EEB, for purchase of electric vehicles between April 1st, 2019 and March 31st, 2032 with a loan, it is up to rupees 1,50,000. So, for purchase of electric vehicle, if they are taken loan, they can claim up to rupees 1,50,000 under section 80EEB. Next, section 80G. So, on donation to various charitable funds and institutions. Yes, if you are giving any donations to institutions and charitable trust, it is exempt up to 50% or 100% of amount donated based upon for which institution you are providing, for which organization you are providing. Next, section 80 GG, against house rent allowances, yes, up to rupees 5,000 per month. So 80 GG is about house rent allowances, exempt up to 5,000 per month for a year, maximum of 60,000. Next, 80 QQB, tax deduction benefits from the royalty earned from sale of books. Yes, if you are earning any royalty from sale of books up to 3 lakh rupees, you can claim as deduction under section 80 QQB. Next, 80 RRB, tax deduction on royalty payments. Yes, so tax deductions on royalty payments up to rupees 3 lakh. So if you are paying any payment towards the royalty, then it is deductible. You can claim the deduction up to rupees 3 lakh. Next, 80 TTA, against interest earned from savings accounts. 80 TTA against interest earned from savings account up to rupees 10,000. If you are earning any interest from savings account, then up to 10,000 rupees it is deductible. You need not to pay tax on it. Next, 80 TTB, 80 TTB on interest income from deposit for senior citizens. So interest income for deposit of senior citizen up to 50,000, it is deductible under section 80 TTB. Lastly, section 80 U. So deductions available for taxpayers with disabilities. So if the taxpayer is disabled, then for his disability, you can claim up to rupees, maximum of rupees 1,25,000. So these are all the different sections what we have and what reason you can going to claim and what is the maximum amount you can claim as a deduction under chapter 6A with respect to section 80C to 80U. So with this, I'm going to wind up this particular session. We'll meet in the upcoming sessions with few more topics. So until then, thank you all.